The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 10th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start of their day. Let's make sure that we do everything we can to have a terrific Thursday. And I say welcome to all our new e-Signal version 12 users, the trading platform that has integrated Tiger TV as its media option. That is a beautiful thing, folks. If you haven't had a chance to check out the e-Signal platform, I recommend you do it. You can. It's got a 30-day trial period out there, and you'll be able to go ahead and insert Tiger TV live into the system. You'll see some of the tools that I use inside the e-Signal charts all day long here. Now, this is a interactive show, and that means you've got the opportunity to give us a call at 877-927-6648. You've got the opportunity to do that for 9 hours each day as we go live from 9 a.m. to 6 p.m. Following me, we've got our man Basil Chapman out here today. He'll show you about the Chapman Wave. I'll show you a number of different tools that we can use out here. Rhodes Momentum Indicator tools. We'll go take a look at some of those. And my goal during the next hour, it's really to teach how to master the tools for trading. We'll use A to B equals CD tools, Fibonacci expansions, retracements, candlestick signals. Those are the signals the bulls and bears make for you and I each and every day. And we'll take a look at different trading strategies. So just give us a call, 877-927-6648. This is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow. It's trading down 133 points, trading at 16,852. S&P is off 15, trade at 1958. Composite off 47 points at 43.71. NASDAQ, New York Stock Exchange off 100 points. Let's take a look at net declining issues, 1773. So you got decliners outpacing advancing issues by, let me do the math on this, nearly 5 to 1, 4.5. You've got 544 advancing issues, 2,300 declining issues. So we've seen a little bit of a bounce here this morning. This is, when I say a bounce, off of the open. To be expected when we take a look at the intraday charts out here. Let's go do that. Let me switch over to this tab right here, and let's take a look at the intraday time period. So let's take a look at the 120-minute time period for the S&P futures. Let's start there. Right now, you got the S&P futures are trading out at 1952. When I say, and what we do have here, we've got to be careful. We're in the trading session here that's going to end at 12 noon, so we've just began a new trading session. What is forming here is a bullish engulfing candle. That bullish engulfing candle is coming after we've got, let me just do this here. I'm going to put up a different chart. All my systems are fed by the e-Signal platform out here. Let me go ahead and expand this up. All right. So what we're taking a look at a pattern here that is formed thus far at the bottom, and that is a pattern what I call price relative strength divergence. That is where, when you take a look at the first move down that took place between 10 and 12 in the morning, that was on July 8th, that was pushing down, and the relative strength reading on that, this is a 14-period relative strength reading that we're taking a look at. Put that on. There we go. I can give you what the number was now. The low on that was 20.25. Now, as prices pushed down lower here this morning and coming into the session that just ended, just as we were coming on the air, you'll see that the relative strength reading was 27.31. You can see a line drawn across the bottom of my screen out here. Let me just actually reload everything here. You can see the line going across my screen to identify that we've got some divergence going on. And at this moment, what we see here is we see prices also when right now it's in the oversold condition. Now, when a market gets in an oversold condition, when you take a look at a stock chart, whether it's oversold or overbought, it typically works itself off by moving sideways or whatever. If you listened to the show yesterday, I was telling you that the message of the markets before the market responded to Janet Yellen stuff, the message of the markets, by just taking a look at the currency pair, the euro-yen, which we'll do that again here shortly, that the message of the markets were that it wanted higher price. And that's really what we saw yesterday. So the move higher was to be expected. Now, yesterday's bounce, no question, was a bounce on light volume. We're going to talk about volume here as well during the next hour. We're going to specifically speak about volume when we take a look at the QQQ ETF because of its unusual characteristic. So if we were to see a bullish engulfing form here coming into 12 noon, it won't take much because of the small-bodied candle that we saw here during this 10 a.m. session out here. Then that says, okay, you're going to see some type of, you could see some kind of a bounce in the marketplace. We'll take a look at where that might take things to. So let's do that. Let me switch over. I'm going to switch over to a different chart just to easier for me to draw some retrace. In fact, I'll go back to the E-signal chart to draw our retracements from. So let's go take a look at different retracement levels. And retracement levels are just Fibonacci numbers that help us identify floors of a market where price is likely to head to. Let me take this chart here. I want to go ahead and clear a few things. There we go. Style. Take this to the radio show. And what I'm also going to do is I'm going to clean this up just a bit here, just so we've got a little cleaner palette to take a look at. We can always go back and add these different indicators in, which we will do. And I'm going to get rid of the volume as well on this, and I'll keep the price relative strength divergent. Okay. And I'm going to go ahead and delete this A to B equals C to the upside. All right. So now let's take a look at some different patterns out here. Number one, what appears to be forming as an A to B equals CD to the downside. And I mentioned we take a look at retracements. Let's do that first. Sorry for jumping out here. We'll take a look at retracements coming off of the high out here from the trading session of July 3rd. So going into the close, that's out at 1978.25. If we go from that high to the low that was just put in here as we were coming on the air, what we'll see is the dead cat bounce, 0.382 retracement is 1957. So if the ES Mini bounces up to the 1957 level, no big deal, just a normal retracement out there. I suspect it's really going to have trouble because it's dealing with this little swing point here from July 8th, that low of 1952.75. And I suspect it's going to be the 1953 area that may become the resistance band for the ES. But nonetheless, a bounce to 1957, 1958, no big deal. Quite frankly, a bounce to 1965 may be no big deal either. But let's assume. So that's one possible outcome. And that outcome could occur because of the price relative strength divergent pattern. So that's one thing to put on. And what's good to know when you take a look at a stock chart, I don't care which way it is you're trading, you need to be able to look at both sides of the trade, always, and take a look at the new information that is provided to you. That's what that's what we do as technical analysts. We go ahead and project where price is going to go, and we also take a look at the most current information that's being provided to us, no matter what your trading opinion is. Because the real opinion you should do is just lock it at the door and just take a look at trading patterns. Now, let's take a look at the A to B equals CD pattern, which is also likely in play right here. And that's taking the swing point high from July 3rd. This 120-minute time frame that we're using. That's going to be our A point. Our B point is going to be that swing at the 1952.75 level, coming in at the between the 12 and 2 time frame on July 8th. Then the retracement up by yesterday, up into the 2 p.m. session, and that was at a price area of 1968. So the 1-to-1 A to B equals C to the downside gives you a price projection of 1942. I don't suspect that is where price is going to stop. And instead, I think where we see price move down to in this pattern here is more likely the 1935 area. At 1935 is where I would expect we would see price to just kind of slow down and stop. 1935 to about the area of 1929. So 1929 to 1935 is what I would expect as the downside move out here. Why would I consider that to be an area? Well, number one, you saw a nice wide-ranging bar breakout on the trading session of between 2 and 4 p.m., and that was on June 18th out there. And that should be a pretty decent level of support. You've also got a 1 to 1.272, a 1 to 1.618, A to B equals C to the downside. That completes in that area, 1926, 1927, and 1935 as well. So that would, to me, be the downside potential at the moment inside the 120-minute time frame chart, and that is on the ES-mini. That's on the S&P futures contract. Now let me switch over to why is it that I don't believe that is going to take place, meaning a larger bounce, one that you would have to necessarily worry about from trying to buy this low that was put in here this morning. And it's the same reason why yesterday, when we were taking a look at what was going on in the market that helped us forecast that the market was moving higher, that same tool is now forecasting that the market wants to move lower. That's as of 10:16 a.m. this morning right now. Now, this is a daily chart that we're looking at for the euro, Japanese yen, but I'm going to go put this on the 120-minute time frame chart out here and take a look at this is the 1 to 1 A to B equals CD to the downside that is formed out here, and you can see that price is trading below it. I don't care at this stage that it is in the oversold condition. I expect we're going to see that condition pretty much last through the day out here, and that says that what we should see inside of this currency pair now is a move to the 137, 136.85 type area, and the real problem with that, so the 120-minute time frame is broadcasting to us that it wants lower price. And the real issue there is the mere fact that we are now seeing a 0.786 Gartley buy pattern fail. Look, the trading session is not over, so there's a lot of time left, but we are now really seeing this trading session fail. And the 120-minute time frame is not giving me any indication that it is ready to bounce, any pattern at all to take a look at. So the same set of tools that I used yesterday to say, hey, not so fast. Before Yellen came out, what was the market communicating to us? We're using that same set of tools. Did I just delete that? No. We're using that same set of tools to help us to forecast what's going on. However, yesterday we were really looking at short-term time frames. Today, that's not the case. We're now to the daily chart, and here's the deal. When a 0.786 Gartley pattern fails, in this case it was a buy pattern, what they often do is turn into a butterfly pattern. And that says that what the Euro-Japanese yen is communicating to you and I right now is it more likely wants to get down to the 134.16 level. Now, look, this is a directional indicator. It does not have a pip for tick correlation inside of the futures contract, but it does help us to understand the kind of damage that can be done inside of the marketplace. And this is a failing pattern as we speak right now. Any close today below the level of 137.65, and I'm going to say that's absolutely a failure pattern, and we're going to see lower prices inside of the Euro-Japanese yen. That's a daily chart. And so the daily trend is absolutely changing. Now, let's go take a look at our other liquidity gauge, and that's the VIX index out here. The VIX index is going to be key. The VIX index had popped this morning. It opened up at the price level of 1322. Key number here is 1206. Now, that level has acted as resistance. The question is, will that now act as a support level for the VIX? And the real importance here, if you're watching this on Tiger TV, if you're new to TFNN.com, each of us use different tools, different sets of indicators. I'm really what I like to think of as a pattern recognition expert. And the cool thing about the VIX index, one of the most cool patterns, is that when price trades above the 50-day exponential moving average, that's where you see price in the stock markets move much, much lower. And it's just the opposite when it's trading below. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got the Dow off 116, S&P down 13 points, NASDAQ down 41, Russell 2000 off 16. And a chart that I had showed just as we were going into the close of the last hour out here. So I'm going to go ahead and bring that back up on the screen. This is the chart of General Electric. As we take a look at General Electric, did I say showed? Really? Out there? If I did, my apology for my poor grammar. In any event, let's go take a look at the stock chart. Now, if you're watching this on Tiger TV, if you're a eSignal version 12 user and using the media button to watch us, welcome to Tiger Financial News Network out here. With you 9 hours a day, live programming, interactive call options for you. You can give us a call at 877-927-6648. The upper portion of my screen is General Electric. Now, it's one of the few times when I use something other than candlestick charts out here. We're taking a look at a line chart inside of GE. The bottom is the Dow. Now, what's interesting, the first thing to pay attention to on my screen out here, I'll show you a very cool tool, very cool correlation tool, and that is at GE. Not much of a weighting structure inside of the Dow out here, but yet it is a great leading indicator of where price is going to move to when you take a look at divergent patterns. what I'm referring to is if you come back to this time period here where my cursor's at, it's right around the July 22nd, so we're going back a year ago, July of 2013. What GE was doing was it was making lower highs. It's really the pattern. Whereas the Dow last July was making higher highs moving into the time period of August the 1st, August the 2nd out here. We had a divergence. GE was the divergent pattern that was telling us, no, this market wanted to move lower. That's, in fact, what eventually happened. It's not a timing tool, but what it is, it's a great leading indicator tool. Come take a look at the trading sessions here where the GE was moving lower back in the November 2013 time period. And what we saw here moving in and what the Dow was doing through November 26th, right around the Thanksgiving time period, it was moving higher. Another pattern that resolved itself to the downside. Now, at that stage, as the Dow had moved lower, December 12th-ish type area, what it also created was a little trend line. So I drew a trend line off of the lows back in October of 2013 and the trend in December of 2013. That's the lower left blue diagonal line that you're seeing on my screen out here. I drew the same type of trend inside of GE. Now, what's interesting here inside this chart, at least it's interesting to me if we take a look at patterns, is back on January 6, 2014, General Electric broke that trend line to the downside. It broke that trend line. So here, not just looking at divergence, but just simply taking a look at a trend line, it was a great indicator of what was likely to happen. And the Dow took a while. It took 20 more days before it went ahead and broke its trend line. But boy, when it did, wasn't GE a great indicator as to where price was really moving to? Well, let's fast forward to today. You can see these the small red lines and small black lines. Those show you different time periods where you see divergence, and in each of those cases, they resolve themselves inside the direction of GE. Well, fast forward to where we're at now. Come back to the high, back around the middle of June, early part of June 9th or so, is approximately when GE made a high. You take a look at the high that was put in here on July the 3rd, which also happened to hit the bottom of its trend line, so I drew another trend line in here. In the case of GE, it broke through that level right around June the 25th out here. But you've got really now two trends in place here. You've got a divergent top, meaning GE making lower highs. That is a leading indicator of price that wants to move lower. You've got the Dow that was making higher highs. You then also have GE that broke through that trend line, and the counter-trend rally that we saw that took place out here inside of GE is the counter-trend rally I'm referring to, not the markets, through July 3rd, came right back up to the trend line. And when you break a trend line, actually what you actually want to see take place, bullish or bearish, when you break a trend line, what you want it to do is you want it to come up, when you break it, in this case here to the downside, you want price to get back up there and just prove itself to you that it has broken that trend. And that's exactly what GE has done. Now what we're seeing, the day's not over. So I can't tell you where the Dow is going to end up the day. But we're now starting to see here is we're now starting to see the Dow break through that trend line. So here's another indication, another cool tool, another correlation chart to help us identify, perhaps on a little bit longer term basis now from a daily, because these are daily charts, with regard to what at least this indicator is telling us. So when I put that together with the euro-yen, which is trying to crack through its support on its daily chart, and then the third element that we'll just simply put out here is the VIX index. And as long as that VIX index is able to close today above 1206, it's all forecasting lower price. For how long? I don't know. It could be just simply through the full moon, which is, I believe, Saturday or Sunday of this week out here. But maybe it portends to lower prices for much longer. 877-927-6648. Steve Rhodes, TFNN. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 120, S&P down 13, NASDAQ off 40 points right now. I mentioned volume earlier. Let's go shift over. I mentioned specifically the QQQ ETF. And we can see here this morning it's pushed lower, even though it's bounced off of its lows out here. We've done 11.8 million shares. We've been trading for an hour. The trading session that it's dealing with here right now is the July 8th level, 40 million shares. That was to the downside. So there's no question that we've got volume moving to the downside out here. If the Qs were to move lower today with substantial volume, and substantial volume meaning around 80 million shares. Let's use 80 million, about like the 80 million share level. 75 to 80 million shares. Now, that's doable with already doing 11.8 million shares out there. If it were to move lower with 80 million shares or so, that could actually set up a fairly nice low. That's got to make you think, huh? You see, it's the QQQ that has perhaps one of the most unusual volume patterns, and then it makes lows, has been for years now, makes lows with high volume. And yes, when we talk about high volume lows out here, when you take a look at any individual stock, we say that's where price is going to head back to. It acts as a magnet or what have you. It's a little different inside of the QQQ. So if you are bullish, you're actually looking for an exhaustive type move like that. You want to see volume. You want to see price move lower because that sets the hook for a low. If you're bearish, inside the QQQ, you actually want to see volume. You want to see price move lower, and you want to see volume kind of, expand. But you don't want to see expand to the extent of getting to 85 million shares or so out there. You really don't want to do that, and that's the unusual thing. So from the bullish or bearish side, we're now in the summertime, right? It's July 10th. Happy birthday to my brother David out there. It's July 10th out there on a Thursday. You got July 11th tomorrow being a Friday. Not really likely to be big volume days. And so moves lower on light volume are actually more bearish inside of the QQQ versus anything else. So that's putting that together as well. Back to the VIX index chart out here, just to get a gauge as to what's going on. I'll give you this other piece of food for thought. Right now it's trading at 1256. So at 1256, let me see what the percentage change is inside of the VIX. Where is that? That's only 7.8%. The VIX has another characteristic, which is that if you have days where it exceeds 10%, usually you'll see the following day, sometimes it's 2 days after, some kind of bounce in the marketplace. So for the VIX to hang right around this 1257, 1260, 60, anything less than 10% one-day rate of change out there actually becomes very bearish. So inside of the VIX, it would be very bearish for it to do that and only have a 1 day rate of change of less than 10%. And so long as it stays above the exponential, the 50-day exponential moving average, which again is priced at 1206, that's how I think you should be taking a look at these different correlations. So we've taken a look at the VIX index and what the meaning is behind that. We've taken a look at price moving down into the oversold condition inside the relative strength indicator out there. We've taken a look at the currency pair, the euro-yen, to put it all together. We've taken a look at volume from the VIX standpoint out there. We've taken a look at really both sides of the trade and what it is to be able to look for so that you can piece together what the real message of the market is behind the current move out here. So I hope that helps you in placing together the market. Let's go take a look at some stocks here that are moving to the upside as well as moving to the downside and see what they're trying to do. Let's start off with United Airlines to the upside. UAL is the ticker symbol, up a nice 7% here this morning, up $2.84. United Airlines taking out a resistance area of a market profile. United Airlines has been in a bit of a downtrend since it put in a high, since it made a 100% move of a move is what it looks like to me. It most certainly did. Back here on the trading session of June the 6th, when I got up to a price high of $48.13. Made a 100% move of a move to the downside. What do I mean by that? Let's take a look at to the downside, because let's deal with what currently here, and then we'll show you the upside move. I'm going to draw a line from the swing point low that took place on April 28th. That was at $38.06 out here. What we'll see, that's a swing point. A swing point, you might ask, hey, what's a swing point? Swing point is where you see a significant change in trend in a marketplace. Much like driving down a street and you see a significant intersection. You come to a significant intersection. Certainly as you're driving down the street, you're going to see other small crossroads, maybe leading into subdivisions and so on and so forth. And certainly as a market moves, in this case here, from the low of April 28th to this high, this other swing point that I'm looking at on June 6th, there were a lot of those little crossroads. We want to pay attention to where we see the significant changes in trends. Swing points act as magnets. And when price deviates and turns in a different direction, it's as if it's going home from work. It's like going from your house to work, from your work back to the house. and really what the market in essence is doing as well, and what your expectation on a trade, higher or lower, should be to look at where are the swing points. Well, in the case of United Airlines, its swing point is at 38.06. When it started moving lower with this bear sash candle that was put in place here on the trading session of June 9th, when it closed below its market profile on June the 11th out here, that started the cascade. And when it gapped down on June 12th, you now had really three indicators that were saying United Airlines wanted a lower price. Where did United Airlines eventually get to? Got back to that swing point from the trading session of April 28th. That's what we refer to as a 100% move of a move. The move started from the bottom on April 28th, much like leaving your house to go to where you're going to, grocery store, work, whatever it might be, all the way up to the high. Makes a 100% move of a move by coming back down there. Now what we're seeing here is United Airlines. Is United Airlines going to go ahead and make a run all the way for its highs back on June the 6th out here? It may be that it's going to do that. Let's just pull this back a little further. What else do we know about United Airlines? If I take this line here and I pull it back, what we're really going to see what United Airlines is doing, that's still using that swing point low from April 28th. That's along the lows. Let's take United Airlines. Let's take a look at another line that I'm going to draw. Steve is going to draw across the top. That's going to be the high from the trading session of January 22nd out there, right around the 49.20 level. Now, in this case here, I can pull that line maybe a little bit lower down here, and that really is saying that what United Airlines is doing is consolidating. So this has a consolidation pattern, and the range of that consolidation is $38, $38 to $48. So it's a 10 to 11 point consolidation inside of United Airlines. And it says to me, knowing that it's in a consolidation pattern, is United Airlines is likely going to move up to the top. What it's going to have to contend with, though, and where it's going to really find resistance, is going to be at this gap that was created. And a gap down, that was a supply line, that was the June 12th area. And so as United Airlines gets up to the 44.91, it may not be able to make its move much more than that, especially when a couple days ago, as it was making the 100% move of a move to the downside, it's really another high volume low with 15 million shares out there. But up nicely today on a decent volume, 6.5 million shares, United Airlines. That's what it is doing. Let's take a look at something else moving to the upside. Let's look at another high percentage move out here. That's not a ETF. AmREIT Inc. Let's see. What are these guys here? What's moving this here? They're going to acquire, so Regency Center is going to acquire this real estate investment trust, so we're not going to go take a look at that. Let's go take a look at Zumez, Z-U-M-Z, not to be confused with Zuma, which is a great restaurant. If you're in an area where there's a Zuma, and the first Zuma restaurant I went to was in London out there, really kind of a neat, cool restaurant, good food out there. But I digress. Let's just take a look at Zumez. Zumez, I believe is how you pronounce it. Z-U-M-Z is a ticker symbol. It is taking on the swing point high from June the 5th. That's got 809,000 shares. It's up into that swing point here this morning with 372,000 shares. Not too bad. If Zumez can close above the high of $30.36, it'll be setting up A to B equals C to the upside. That would say that its price projection here, and so a pretty nice looking strong stock in a market that is struggling this morning. The A point, by the way, was down here, that swing from April the 25th. The B point is the swing it's taking on right now, the June 5th level. The C point being the retracement, the 61% retracement to the trading session on June 20th. 1-to-1 A to B equals CD. Inside this equity would give you a price projection of $33.42. So if Zumez can get above $30.36, that is likely where it is headed to. Not too shabby. Let's put this on a weekly time frame out here as well to get a better picture of what this equity is doing. And so we can see this. So on a weekly basis, okay, that's why. So I don't remember the number I gave you on the daily, but the weekly says 33.50. Since I don't remember, let's go take a look at the A to B equals CD pattern. That'll still be out there on the chart. Okay, let me pull that down. That's at 33.40. How about that? So you got a to B equals CD that's going to complete at a weekly swing point out here where it may find its next area of resistance. That was a key reversal session that took place on the trading session of May 20th, 2013, the high of which is 33.50. You got to love how that works out here. So at 33.50, I would expect it to find some pretty decent resistance if you see it close above 33.50 on Zumiez, Z-U-M-Z, with more than 1.9 million shares. This week, by the way, it has done so far 1 million shares. That would set up a weekly A to B equals CD to the upside. So you may want to go ahead and put this one on your charts to watch Zumiez as it takes on that swing point high in the $53 area, because that would say, hey, I'm sorry, $35, $33.50 area. That would say on a weekly basis, I would like to move up to $36.25, another $3 or so. That's ticker symbol ZUMZ. Let's take a look at some things moving to the downside out here. So percentage-wise, we looked at Sarepta Therapeutics earlier this morning. That's down 20% right now. Let's take a look at BlackRock. BLK is the ticker symbol. It is trading out at $314 as we speak right now. BlackRock is down about 2%. Let's look at the daily chart. A nice bullish looking chart out here, so not too much damage. No real big volume to the downside. 1.3 million shares here right now, but it's been a struggle. It's been consolidating. It has struggled to take out the January 13th, 2014 level. Again, this is a weekly chart that I've got up on my screen as we speak right now. So fairly decent looking pattern. Says that on a pullback, this ought to find support at 288.30 or so. Let's take a look at its daily chart, see what the daily chart is suggesting to us. So it's gapped down here this morning. Looks like it's trying to change a change in change. How about that? Change. It's trying to almost sound like David Bowie out there with changes. Looks like it's trying to change its trend by moving down and gapping down below its unfair low, its market profile support area. But that's just simply a level that was established a few trading sessions ago or so. And really, it's trying to find support at the little bit longer-term support level at the area of about 315, we'll call it. And it's trading right now at 314.74. So it closed below 315. Let's see, volume here at a nice little breakout session on June 18th, 935,000 shares. Today, pulling back with 143. So not too bad. It's not really falling apart. I suspect what BlackRock ought to do is find some support down here at its swing point. This is really... Well, let's look at it like this. BlackRock hasn't broken a swing point yet to the downside. The first opportunity to do that would be the June 26th level. If it gets below or closes below 312.54 with more than 600,000 shares, that would tell you that you now got a change in trend that would be taking place. The question is, where is it going to move to? And I would say, unless volume really picks up, meaning it gets more than 900,000 shares, it's likely going to find some support out here at its most recent swing point from June 17th, anywhere between 305.84 and 312.19. Question in the den for Steve Osan here says, Steve, in your experience, do gaps above need to be filled? For example, 10-minute SPY, IWM, QQQ diamonds. This is my response to that. That comes from Peak D inside of our Tiger's Den. Is that what the Qs, the SPYs, the IWM, the diamonds are really doing? Is they're just catching up to what was going on inside the futures market. So I don't pay as much attention, and especially on an intraday basis, I don't pay as much attention as to what's going on inside those as I do as to what's going on inside the futures market. So let's go do this, because you mentioned a 10-minute chart. And you're looking specifically at the Qs, I suppose. So let's go take a look at the Qs. Let me put this on one of my short-term charts out here. So let's go take a look at a 10-minute chart inside the Qs, see what we can find out here. And what we're going to be looking for here is we're going to take more of an analysis of volume, what's going on from a volume standpoint, a couple other things. So let me change my style template so that it's got everything turned on that I like to use out here. And we're going to have to do that. My apologies. I guess I was baiting you to wait till we to go into the next breakout there. Actually, that wasn't the case, because I didn't realize that we were going into break. But we'll be back in about 4 or 5 minutes. We'll go take a look at the NQ and see what it's doing on a 10-minute time frame. Steve Rhodes, TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 109, S&P down 12, NASDAQ Composite off 34 points as we speak right now. We had a question inside our Tiger's Den about the QQQ, and our listener, our viewer, because they're watching us on Tiger TV, watching us charts inside our Tiger's Den. If you'd like to see our charts in HD, high definition, out here. Go to the homepage of TFNN.com. After you've signed up for my newsletter service, Mastering Probability, then go test drive the Tiger's Den, a great group of traders inside that environment where you'll get some great trading ideas. You'll also be able to see all of our contributors, all of our hosts' charts in HD out there, and that is the way to do it. So the question was, does this gap have to be filled? And my suggestion was, be paying attention to what's going on inside of the futures contract. And so I'm going to go switch back over, and we're going to take a look at the 10-minute time frame here for the NASDAQ futures. What you're going to see is I'm coming from the most recent swing point out here, which took place at 2:20 this morning. And that was at a price level of about 38.86. I'm going from that high down to a low that took place out here at about 9:20 this morning. This price got down to 9:30 this morning, 9:30 to 9:40, got down to a low of 38.31. What we've seen thus far is a 0.618 retracement, so just a natural retracement, 38.65. If we see price continue to move higher out here, the next level up inside of the NQ ought to be to the 38.74 level. But this 0.618 retracement area, on a 10-minute chart, it's where you start really paying attention to the bounce inside of the marketplace. Inside of the Qs, what does that equate to? I don't have the correlation of, I can tell you that at 38.65, if I try to see what kind of retracement maybe, it's done. The problem is I don't have the same data to work with. I've only got the trading hours, where the Qs were really trading. And so it's not, there's no way for me to really do any kind of a correlation out here. So the real question was, does this gap have to be filled? And, my response was no. I'd be paying more attention to what's going on inside the futures markets and what's going on maybe on the longer-term time frame. Speaking of longer-term time frames, let's take a look at a couple of them just before we get off of the air here. So let's go take a look at the Qs. The Qs here, thus far, from a weekly chart, they haven't given any kind of reversal signal. They would give a reversal signal if, in fact, it was to close below last week's open. Last week's open was 93.71. You're trading 94.42. So the weekly trend in here inside the Qs is still in a nice bullish mode. The daily chart, is beginning to show some signs of weakness out here. And right now, it's this moving average line. That is the 8-period moving average line. That's acting as a resistance zone right now, right around the 94.47 level. So it's beginning to show a change in trend. Likewise, and so it's really all going to be about the Qs and the IWM out here. The IWM, Russell 2000 on its daily chart out here. This is showing that there is a change in trend that has taken place on the daily chart. And that suggests that the IWM wants to move all the way back to the make a 100% move of a move and get all the way back to the hammer candle that took place on May 16th out there. So as we end the show, let's go check in on a couple of our liquidity gauges, get a feel as to what is going on. We'll go take a look at the VIX here real quickly. That is trading out at a price level of, oh, come on, do it quickly. Do it quickly. I got about 16 seconds out here. The VIX is trading down at 12.39. So long as it closes above 12.05 today, that puts us into bearish, demolition-ish type territory. And, of course, one more check-in on the currency pair, the euro-Japanese yen. The bulls are trying to defend their area inside the daily chart out here, and that's the price level of 137.65. Any close below that suggests much lower price in the markets. Folks, thanks so much for joining me. Stay tuned. Our man Basil Chapman is up next. I look forward to seeing you bright and early tomorrow morning. Have a great Thursday, folks. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.